Welcome back. Trust you enjoyed your lunch. We're going to rip into our afternoon session now. At the end of this session, after afternoon tea, you break off into some parallel streams. If you haven't checked out the details of those yet, they're all on the app, or during afternoon tea, you can go to the registration desk and find out what we're doing after afternoon tea. But where do we go now? Anna described banking as, quote, an issues-rich environment when she was describing the environment for Simon. And two of the richest issues are very high on the agenda at the moment are both regulation and the future of payments. And that's what we're going to focus on in these next two discussions. Here on our regulatory change panel, as you can see on the screen behind me, eminently qualified people to speak on this. Mark Woodruff is the CEO of Citi Australia, Sean O'Malley is Group Executive for AMP Bank, and Chris Taylor is Chief of Policy at ABA. And to steer the conversation from Harbert Smith Freehills Kramer since the 1st of June this year, someone who I note in 2025 Best Lawyers Report was rated Lawyer of the Year in the Criminal Defence category. It's good to see that no one's quickly jotting that down. I hope we only ever know that in a theoretical capacity, but here he is. Andrew Eastwood, all yours.
Over the past 25 years, I can't tell you the number of times that I've had financial services clients say to me that the current rate of regulatory change is unprecedented. I'm not sure that unprecedented is the right word anymore. Regulatory change is ongoing and relentless. It feels like, particularly in the financial services sector, regulatory change is now a given. As reflected in the topics for this conference, the banking industry has a number of regulatory changes to try and get its head around at the moment. The new scams prevention framework, AML reforms, merger reform, CPS 230, payment system reforms, privacy reforms, the list just goes on and on. And even when simplification or deregulation is mooted, as it was this morning, even if that happens, that of course is a change that itself needs to be adjusted to. So it's a really important topic to discuss, and we are fortunate to have a panel with great experience to help us consider the issues. And I thought, Chris, a good place to start was somewhat looking in the rear mirror and just looking back at these sort of decades of what feels like relentless change, and interested in your thoughts about what's driven that.
It's a great question. I think referring back to the conversation that Simon Birmingham and Anna had before, thinking about why are banks regulated, and I think there's two main reasons for this. The first is every day you have some degree of interaction with your bank, individually and across the economy, whether it's buying a house, starting a business, paying for your groceries, or finding a place to save your money. It really is integral to the way you interact with your own wealth and the economy at large. It also has a direct correlation to financial stability. So I think they're the genesis of it is the individual reaction, a political focus on it, but also the interaction with financial stability. And when you think about the focus on regulation that's come over the past 2 decades, a lot of it has been in reaction to a crisis or an event. So after the GFC, we saw a significant focus on financial stability and regulatory regimes and legal changes coming as a result of that. That's resulted in Australian banks now being among the best capitalised in the world as a result of APRA's unquestionably strong policy. Similarly, after the Royal Commission, what you've seen is a series of regulatory reforms around conduct and addressing conduct failures in the industry. When we last did a count sometime last year, I think there was 1,175 pages of new laws and regulations passed following the Royal Commission. And that's all regulation that needs to be digested, implemented and complied with by the industry. Similarly, when you've seen failings or issues in the money laundering space with very significant fines passed by AUSTRAC, what you'll see is a response from industry focusing on compliance. I mean, $1 billion fine is something to get the attention of a board, and you'll see a risk response from industry. And now we're facing a number of challenges and opportunities that come from a shift to the digital economy. So cyber risk, scam risk, fraud risk, and a very different approach to what makes a bank resilient in the digital age. What's interesting about the changes that have come over the past 2 decades is these are addressing real issues, but what you've seen is a layering or an addition to the regulatory environment. You're not seeing things ultimately removed. No one's stepping back and saying, how do all these pieces now fit together, and what impact does that ultimately have on industry and the economy at large? And what you're seeing is an increase, as I think John Longo said this morning, in complexity, and that in and of itself is a new form of risk. Good regulation focuses on fairness, on outcomes for customers, ensuring that they're treated properly, and that institutions will not fail and bring with them the rest of the financial market. Bad regulation can create confusion, cost, and also an aversion to risk. And we're currently hearing a lot of references to regulation and red tape now, and in the context of how do you deal with this issue, is cutting through thickets of red tape. And I really like this analogy because I think that the thickets of red tape are becoming more and more significant for industry to address. And to some extent, those thickets are making it even harder to see the path forward going from here.
Sean and Mark, anything you want to add in terms of Chris's observations around what's driven change over the last few decades?
I'm happy, maybe just to add, I think Chris is absolutely right. And I think what we've seen in the last 10, 15 years is a real focus on security, safety and stability. And so, has the regulations driven largely from various events, be it GFC, be it Royal Commission, be it others, but we've seen a continuous focus on that component. We've seen a continuous focus on either increasing customer protection, which is good, or increasing system stability, which is good, or increasing resilience, again, which is good. And I think we'd all say that actually good regulation, as Chris outlined, has got all of those facets. And the regulatory intent is often really strong and really purposeful. I think that potentially the flip side, and I know we'll talk a little bit about it, is what is the impacts on that on sustainability and productivity and dynamism of our industry.
Yeah, a couple of things I'd add is obviously the GFC was quite a cathartic experience, I think, especially for international banks. And it goes back to the old adage of, never waste a good crisis. And I think it's important to sort of set the foundation of that, because we really started to pivot there to an environment of regulation for risk management. And I think when we look at this and when we think about the thematic of this conference here today, hopefully we can go to an environment of regulation for growth or regulation for better productivity, notwithstanding the requirement to be safe and stable, etc. So I think the formation of that and the lessons that we can learn over the last 10 or 20 years are really formative for what we move forward. I'd say the second element of what we've certainly learnt in the past is that a lot of that was caused by internal disruption, is how I would frame it. So these is really things that we needed to take responsibility for, that we needed to look through the client lens in a much sort of better way. And now in this environment, it's almost external disruption, which is really sort of pushing hard on the regulatory environment. So I think it's starting to change.
Yeah.
In quite some
staying
ways.
with you, Mark, and I guess if that's what's driven what we've seen in the past, what does that mean for the next decade? Do we expect more of the same? And I guess you're obviously part of a big global bank. What are international trends sort of suggesting?
Yeah, I mean, Well, it seems like we're on a thematic of deregulation in global markets, which is really quite interesting. I think when you think about the next decade, the where I'd start is what are the big drivers, what are the thematics within the financial services industry or the wider economy. And when I think through that, I'm thinking through changes in technology. I'm thinking through globalisation and the shifting geopolitics. And for Australia, and something I think that we need to think about in this room is demographics. And I think there's going to be quite a strong link between future regulation over the next decade and the demographic sort of stress that we might find ourselves here in Australia. Yeah.
Sean, your thoughts on the future?
I think Mark touched on a couple. I think the interesting, technology, and we've heard a lot this morning naturally about disruption that's going to be technology-led. I don't think, I don't think that's new, but clearly the pace of technology disruption is potentially going to be much faster. We talked a little about AI this morning and what AI brings. Interesting to hear ASIC's views on no new regulation needed for AI, which was good to hear. But there are different and unique challenges that at scale AI will bring to our industry that will need some more change. And I think globalisation and against the geopolitical backdrop, maybe a lot of the work on globalisation actually is going to peel back. And so what does that mean to Australia? Where we do see disruption to our trade flows, or we do see disruption to our supply chains, or we do see disruptions to our capital flows, which we know are incredibly important for our country. And so I think we're going to see some. I think there's a number of those changes that are likely to impact the flavour of regulatory change, and then hopefully, the discussion. I'm really positive about the discussion reigniting in Australia about productivity and the need for us to be more growth focused, and the need for us to find more ways to grow our economy, not to protect our economy. And so I'm hopeful of actually that productivity discussion will lead us into discussions about what are the right regulatory settings and frameworks that might really enable and support that.
And Chris, as you look at the next decade, are you expecting sort of the wave of regulatory change to continue?
It's a really interesting time in regulation of financial services. My team and I earlier this year went to both the US and the UK to speak with our counterpart organisations and with banks and regulators in those markets, really trying to get an understanding of what they're thinking and how they're approaching this issue. And when you step back from it, on both sides of the Atlantic and on both sides of the political spectrum, you've got both sides addressing the same issue around red tape. Now, admittedly, they're doing it in a very different way, but they have recognised that red tape and excessive regulation can hold economies back, and that maybe we've reached a tipping point where we need to start thinking differently about it. Fed Reserve Board member Michelle Bowman has said, regulation is not a costless exercise. The economy wears it, and ultimately consumers wear the cost of it. And getting that balance right and going almost back to basics is an important approach that they are absolutely looking at in the United States. And in the United Kingdom, government has been doing some very interesting things there and really looking at, are regulators regulating for risk, or to what extent are they regulating to enable growth? And that's a really interesting and very different way of thinking about the way regulators operate. Traditionally, they do cover off risk, and what they've effectively said is we are giving you licence to take and allow slightly more risk in the economy, because too much regulation will smother the opportunity that's there in banking and financial services. And I think that's a really fascinating precedent for us to consider in the broader context of productivity and what we look at in our regulatory settings.
Well, going from the general and let's becoming a little bit more specific, and maybe starting with you, Sean, I listed a number of sort of regulatory changes that are occurring at the moment, but what would you say are the ones that are at the moment sort of having the biggest impact on your business, and how are you going about seeking to navigate
Yeah, absolutely. And just context for everyone, we're a small bank. So, we're 10th largest bank, but that makes us a small bank in Australia. And so, often regulation, the impacts on us is exactly the same as the impacts if you were one of the big 4 or 5. And so there are a lot of changes going on. For us, obviously, CPS 230 has been very top of mind with it just coming into effect. And I think it'd be fair to say that getting started on 230 isn't though the end of 230. And I think in talking to a number of my colleagues in different size organisations, we're still spending a lot of energy and effort on how we ensure that 230 is completely embedded in all of our organisations. We obviously the work that everyone is doing, and I think really important work that everyone's doing on anti-scams and fraud. We know SPF is just coming in, and so there's for us that's a continual piece of work that won't ever be done. I know when we've been talking to our board about the level of that work, that will not be done. It's going to be a continual raising of the bar and lifting, and then so those two have been very top of mind for us. And then I think the others that have been having an impact. I think it's not necessarily tied directly to new regulation, but sometimes it's about the expectations that come along with that. And so we've been obviously a lot of work has gone into Treasury capital type work around the Basel III, etc. So there's been a continual raising of the bar in that space for us as well.
Mark, for Citi in Australia?
Similar. Obviously, we have a different type of business, and I sit here as part of a really large global organisation. I think an interesting area is public and private markets, and the work that ASIC has now started this year in regards to that, and especially around the idea of capital formation in Australia. And I think there's where we continue to wrestle with that. I think the UK example is quite illustrative here, where they've had really a declining public market system, capital market system. They've had really slow growth. And what concerns me here in Australia is that if we don't rebalance, and I don't want necessarily more regulation in private markets, I don't think that's healthy, but there are efficiencies that we can drive in public markets that would change the narrative that I have with a lot of CEOs around Australia, whereby I have a lot more conversations with publicly listed CEOs saying, gee, the private side seems pretty attractive, than I do the private side CEOs going, gee, I want to really list on these public capital markets. And the reason that's important is because as we go into the retirement phase of superannuation, the benefits of publicly listed markets are really, really strong. And we need to make sure that we can balance both the public and private markets, and regulation, I think, is going to be a key in that.
And Chris, I guess from a broader banking perspective, sort of the current changes that you think are having the biggest impact?
Yeah, you've heard from Mark and Sean about sort of impact at the bank level. For us, obviously, as an industry association, we're looking across the entire economy and the entire regulatory settings. There's probably 3 areas that we're focused a lot on thematically. The first is the shift towards the digital economy. So as we move more towards digital banking and digital payments, what does that mean for more traditional roles of banks? What is the role of a branch going forward? What is the ongoing role? And how do you manage cash sustainably in a market where its use is declining every year as people rush to use digital payments, and the threat from cyber and scams. So I think that's one area, and there's a lot of thematics that come out of that that my team and I work with our member banks on. The second, I think, are international regulatory developments. There's a lot of focus at the moment on the Basel III capital implementation, and different markets taking different approaches in response to what the US is doing, and saying effectively they will implement them in a capital neutral way, and which has seen a number of markets around the world pause and say, well, we now have to rethink how we're doing it, and what impact will that have on our domestic banking sector and our ability to attract capital. And the third, I think, is the role of banks in the broader economy. Regulation is not always done in response to a pure policy issue. Sometimes regulation comes as a result of a political issue or political risk, as I said before, as a reaction to a perception. And a lot of what we do is really talking about what banks do, the role that banks play in society. So what is the bank's role in helping address national issues like the affordability of housing, in scams, in stopping the scourge of scams affecting Australians, even through to what is the role that banks play in paying tax. A factoid that our corporate affairs team talk about is that of the ASX top 50, 30% of the tax that's paid by the ASX top 50 comes from the banks. So they really are actually contributing back to society, and it's a story that we don't talk enough about as an industry, to have people understand the role that we play in really helping support the economy and the customers that the banks each serve.
This level of regulatory change is obviously very disruptive, and I guess you're all sort of leaders within your organisation, and maybe starting with you, Mark, how do you lead through regulatory change, and maybe as part of that exploring whether you think there are sort of cultural or organisational shifts that are needed to sort of get people thinking about regulatory change in terms of strategic opportunity, if that's possible with some of these changes.
Yeah, well, I suppose we've had no shortage of organisational changes to lean on. I think you have to start with the principles, which is compliance is not negotiable. It's a privilege to have a licence to operate under. It's not a right. So if we start with that, then how do you deal with the regulatory change coming forth? I think this really speaks to the point of equivalency, and that's been incredibly important in our organisation. So we've been able to lean on either the lessons that we've learnt in other markets, or the tools that we have within our own organisation that help us implement in an efficient way the regulatory change that comes. So I think if there was one ask that I would make is that the regulators always take into consideration the idea of equivalency. And not only does that help organisations that have multi-jurisdictional presence, but it also keeps us somewhat up to date with the competitive landscape of regulation, which we touched on before. And that competitive landscape is becoming more competitive. You touched on the changes in the UK. We know what the changes are in the US. It's going to be us. It's going to be important for Australia. It's going to be important for our productivity agenda to make sure that we keep up to this pace of change. So I think if you anchor yourself in the core values of regulation, the rest of it can be adjusted for, but it needs to be a two-way dialogue, and we need to know what's happening in offshore markets to deal with it. Yeah.
Sean, how do you think about leadership on this issue?
Yeah, in a number of ways, and I think Mark's absolutely right in terms of compliance and our licence, both our real licence and our social licence are incredibly important, and they're incredibly important, and they are an honour to have both of those in our market. So I think they're things that we value, and they're things we really respect and that we take very seriously. We try to think about how do we develop the culture that is respectful of risk, and therefore you're not just doing a new piece of regulatory change, or you're not just doing but actually a culture that's respective of the risks that we're seeking to manage, and ultimately what does it mean for the customers that we're serving, and for our shareholders who invest in our business. So try to think about it and drive a risk culture led mindset. I think the other thing that I certainly talk a lot to my team about is the risk reward, and ensuring that we've got a mindset about risk and reward. And some of our regulatory change doesn't give us that opportunity, but some often does. Often there is some areas in which we can think about where might there be some extra risks that we want to take, and what's the upside reward for that. And as a challenger brand, that's really important to us to look for not just how do I deliver a reg change and just be compliant, but actually where might there be a way to be a little different? Where might there be a way to actually look for some reward that might come with taking a slightly different approach or a slight different risk? So I think it is always important for us to be thinking about that risk and reward, not only just the risk side.
And Chris, what's your take on this one?
I think the way we need to approach regulation going forward is really thinking and asking a different question when we're responding to government or having those conversations with regulators about, well, what does this mean for customers? What does this mean for the economy? And really kind of putting that at the core in the response back and having the ability to question some of those propositions in thinking about how we respond. Secondly, we have an opportunity, I think, to help come up with the answers. It's very easy to say there's a problem. It's very difficult to come up with a problem and then actually articulate the solution. And I think that's what regulators and government certainly benefit from, is when you come not only with an articulated problem, but with perhaps an alternative way of achieving the policy outcome that government or a regulator is trying to achieve. So really co-creating that area of opportunity. And getting a response back, a response that's ultimately going to be workable for industry. The other piece which I'm also very alive to at the moment, and I think a few speakers have talked about it, is the recent developments in the United States around stablecoin. There are a whole lot of changes occurring in the financial system at a very, very high rate that will have implications that we're really only starting to understand. And there's this almost delicious irony in the United States. If you recall, maybe 5 or 6 years ago, Facebook originally proposed creating their own digital currency called Libra. And at the time, regulators freaked out and very much kiboshed that approach. And ultimately, the stablecoin bill, which has now passed both houses of Congress, is actually going to enable the private issuance of currency. And there's almost like a full circle that the United States has gone on. One of the reasons why they call banknotes is because they were issued by individual banks. In the mid-1800s, they used to have a problem with so-called wildcat banks, where if you actually wanted to go and collect whatever was underpinning the value of the banknotes that you were holding, you had to go out where the wildcats were. And that was the reason for creation of a centralised currency and the regulation of the current banking industry in the United States. Allowing the private issuance of stablecoin can have very far-reaching implications for the banking system, to how money is collected and ultimately on-lent into the economy, and really seeking to understand that and how we respond to that here in Australia, I think, is a fascinating part of what we work on our members with. So.
I wanted to come to, I think, something you mentioned earlier, Sean, which has come up a lot in this conference earlier today, which is sort of the productivity debate that we're having in Australia at the moment, obviously coming up to the Economic Reform Roundtable in August. How do you see this topic of regulatory change? How does that connect in your view, to that productivity debate?
Yeah, I think it's a really important component of the productivity debate. If we think about the impact that if you think about regulation in some ways as red tape, as Chris outlined, if you think about some of the duplication of regulation and the inefficiency that causes in our industry, that is a drain on productivity. That's one of the factors. For a smaller organisation, we also think a lot about what are we directing our capital towards. And so, choices that need to be made about deploying capital into, innovation, into new product development, into productivity enhancing activities versus capital and effort that needs to be deployed into the next reg reform program. That's a real trade-off. That's a trade-off that we make, and I know other banks, really, regardless of size, have to make that trade-off. But that's a real trade-off, and so I certainly think that as we think about what's going to restart Australia's productivity drive, and what are the settings that we need to help kickstart productivity that has stalled for more than a decade, and thinking about how do we ensure that we've got the right settings in place and that we allow investment in the right places that are actually going to drive that productivity that's a super important part of the debate.
Mark, your thoughts on the productivity debate?
Yeah, always try and think of this through a client lens. I think, and clients are impacted by regulation in banks in different ways. If we take CPS 230, we have to lean into the client side to help them over that regulatory hurdle as much as they're helping themselves. And with that comes an embedded industry cost. And if we're talking about productivity, you're essentially talking about greater output per unit of input. The cost is a drag on that idea of productivity. And so therefore, we also need to talk about the cost of regulation. And some of these industry-wide regulations are very expensive. Necessary? Yes, but we need to come up with a way, I think, of trying to identify how much is this going to cost and what is our risk reward? Because similar to what Sean was saying about where do we allocate our capital, we have to consider that on a global scale. And at some point when we run the numbers of Australia versus other countries throughout the world, the number will be lower, and the ability for us to attract internal capital in Australia might change. And that has an impact for everybody in the industry. The other thing I'd say is that it's not just the complexity of regulation by a certain regulator. I was somewhat surprised, I shouldn't have been, but when the Treasurer reached out as part of the start of his productivity agenda, he said, I reached out to 27 different regulators. And it made me stop and think that it's not just the regulators and the individual sort of complexity of regulators themselves, it's the ecosystem of regulation. And when I talk to clients, the biggest bugbear isn't necessarily the regulator they know, it's when they're trying to do business and they have to walk through 3, 4, 5 different regulators to try and get something done. And that cost, I think, is the real drag on productivity. So I hope as part of this review, they don't just look at how do we make regulation more productive. I hope, how do they look at the ecosystem of regulators and make that more productive for business in Australia?
Yeah, really important point. Chris, any additional thoughts on this sort of relationship between productivity and regulatory change?
Yeah, I think that's an excellent point that Mark has made. It's that collective effect that can impose a burden. So not necessarily saying cut regulation, but think about how you prioritise and sequence regulation. One of the key advocacy areas that we've been focused on as an industry has been implementing a regulatory grid. So when the UK left the European Union, they had to renationalise all of their financial services law, and to help make it easier for industry, they provided a 2-year look forward on what legislation would be implemented and when. Government here has now committed to and delivered on the first regulatory grid. But the power of that grid is not so much in industry understanding what's coming down the pipeline in the next 2 years. It's actually having the key regulators in a room thinking about how they prioritise and sequence that regulation so that you're not digging up a road to resurface it only to redig it up again. And sometimes, there needs to be a discussion about trade-offs and priority between whether an approach taken by one regulator is more or less important than another, or how you might sequence that in a way to reduce the burden on industry. So I think that's a really powerful tool that government can use to help sequence and prioritise the implementation of regulation. One additional point I'd make, one of the things I find so attractive about what the UK is doing, similarly, it's not just about what you cut. Because a regulator has a power doesn't mean they should use that power, or they should be cognizant when they use that power, the impact that it will have on industry. And I think that's where, when government is writing to regulators and saying to them, we have a target, we want to reduce the administrative cost of doing business by 25%. We don't want to reduce the protections on consumers, but we do want to reduce the overall cost to industry. We want our financial services sector firing on all cylinders. It does make regulators think differently about how they use their powers and more cognizant that data requests or information that they seek or reports that they put out can be more burdensome, and they should be cognizant of that in their decisions to exercise those powers.
And as we near the end, at the risk of perhaps ending on a more controversial note, maybe ask each of you what's something that you would like to see more of from government and regulators, and what's something you'd like to see less of? Do you want to start us off, Chris?
Look, I think the ABA has a very healthy relationship with our regulators, and I think our regulators value the input that industry provides when they ask questions, whether that's directly to our banks or indirectly through us as an industry association. They recognise the value in the insights. They hear the different voices amongst our membership, from large banks through to sort of our mid and smaller banks. So I would certainly encourage that there is an opportunity to try and, if we better understand the problems that regulators and government are trying to solve, we can find ways of potentially achieving that in the most efficient and productive way. And I'd certainly say that's certainly something to encourage. And we're very happy to continue to work with regulators and government on that basis.
So more dialogue. Is there anything you're willing to identify less of?
Coming to a conclusion or coming to an answer without doing that early dialogue, I think, is certainly something I'd say do less of. Have that conversation early, and it can be, you can still land in the right policy outcome, but maybe in a slightly different way. So that's what I'd say do less of.
Yeah. Sean?
I'd probably go back to something that I already said. So, my one or two wishes would be really that the explicit consideration of the impact on productivity, on competition within our industry, and on the economic dynamism of our industry is super important. So I'd love to see that explicitly considered alongside the goals of safety and security and customer protection and stability. So I think having that explicitly considered is super important. I think and Chris sort of mentioned about the great work I think the ABA and members have done on the reg grid and on getting the reg grid into reality. I'd really, and I think we'd really like to see the reg grid used not just of a list, but actually as real prioritisation. I think that's a real opportunity here and now, and so I'd really like to see that used to prioritise, not just to list what we have coming at us.
And Mark, to finish us off?
I think equivalence is really critical, not just from the structure of our organisation, but also I think just from an industry and from a country perspective. I think it's really, really important. Without sounding like a politician, in terms of what would I like to see less of, I think it's probably, what have we seen as really good practice? And I say that because there has been a lot of great engagement, there has been a lot of positive regulation in the last decade from our regulators in the industry. I think one of the things that can sometimes be really difficult for us is around timeliness. And so, how much guidance are we given? And then how thorough is that guidance before the point of implementation? Because the later it comes, the more difficult it is for us and the more costly it is for us. So I think instead of the less of, maybe I would say that, what are the best practices, I think is probably the easiest way to put it.
Thank you for all the insights. I think that's all that's left is if you could ask you to thank Mark, Sean and Chris.
Thank you.